Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Omotayo Okusanya. He's a Senior REITs Analyst at Mizuho Americas to discuss the impact of COVID-19 on the different types of REITs that are represented in the healthcare space. Tayo, thanks so much for joining us. Welcome to Trade Talks.
My pleasure, Jill. It's good to be here.
All right, now population growth is certainly a strong driver within a particular segment of those moving into the 80 plus year range. And let's talk about that and how the sector is trading from a valuation perspective.
Sure. So I think long term, although again you've had a challenging stock performance for the healthcare REITs during the COVID crisis, on a long term basis, we do think that fundamentally it's a sector that investors should be owning. And I think again it's really based on this idea of aging demographics, the need for more healthcare needs for the 80 plus population, and that is going to be the fastest growing demographics in the US over the next 10 years. So I do think the healthcare REITs are set up to benefit from that when we start to see that over the next 10 years. In the near term, though, I think you have had challenges from a COVID perspective really impacting for some of the healthcare sector's ability to pay rent from some of the underlying tenants, and for some of them that have operating businesses really losing occupancy and seeing higher operating expenses from labor and PPE, which again has been a challenge for the group.
What's your most preferred subsector?
Sure. So we like the life sciences space quite a bit. I think, again, all the biotech companies racing to find a vaccine for COVID, I think has really kind of highlighted the importance of life science and biosciences within the United States. That's a sector that I do expect to continue to get very strong private equity financing, very strong NIH financing. And I think, again, there's just going to be much more focus on life sciences going forward, which I think is going to drive very strong fundamentals in that space. From there, we like the medical office building names, then followed by the skilled nursing names. We are most worried about senior housing right now, given a combination of the issues from COVID and as well as some supply issues that the sector is currently dealing with.
So when you look at the medical office space, this is interesting. It should, in theory, rebound as volume is rebounding with doctors and dentists and elective surgery centers reopening. How long do you think it'll take for that demand to be there 100%?
That's a great question. I think, again, for quite a lot of the medical office building names, now that a lot of states have opened for about 2 to 4 months, they're actually seeing fairly fast rebounds. It's clear that from the perspective of utilization of their space, that probably bottomed out in mid-April, and they're all seeing very strong rebounds right now. So I do think, Mizuho, we did do a survey about a month ago, and a lot of physicians were saying they think their businesses can kind of be back up and running within 60 to 90 days. So if that's the case, I do think, the medical office building space is probably one of the sectors where fundamentals will come back faster than probably, skilled nursing or senior housing. And that's one of the reasons why it's also one of our more preferred healthcare real estate sectors.
With skilled nursing and senior housing, why do you think that's going to continue to underperform?
Yeah, I think it's going to take a little bit longer for those sectors to actually come back. I think it's that's where you've kind of seen the prevalence of the issues in regards to the COVID crisis. Again, and that those residents, are the ones who unfortunately have had a disproportionate impact from COVID in regards to infection rates and as well as unfortunate deaths as well. So I do think it's a sector where it's going to take a little bit longer for demand to come back. They've had a lot of headline risk associated with this. There's also a lot of concern that there may be increased regulation going forward. You're still seeing, in order to kind of effectively control COVID on the skilled nursing and senior housing side, there's still a lot of restriction in regards to admissions. There's still a lot of outright bans on admission, and all that's having a meaningful impact on occupancy.
But overall, to wrap up here for the healthcare REIT space, you do feel that it's strong enough that we'll be able to weather this storm. The financials are, from a fundamental perspective, are enough to keep these REITs going?
Yeah, for most of the sectors, yes. I think, again, ex-senior housing, the sector is receiving a lot of government support. You have seen from the PPP loan program, from the CARES Act, from CMS and the Medicare Advanced Payment programs. we are lucky that healthcare is a big priority in the United States, and we're getting very strong government support. So I do think overall, you probably would not see much by way of issues with rent collection. I think May and April rent collections across most of the property types have been very strong. My only concern is in senior housing. It's private pay, it's not government backed. And I think that's a sector that's kind of trying to fight to kind of figure things out without government aid. So in that sector, we may see some pain, but I think for many of the other sectors, the government is going to be there to provide enough liquidity to make it through.
All right, Tayo, thanks so much for joining us on Trade Talks.
My pleasure, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.